Hey everybody, so Vanguard ETFs are well known for being low-cost index funds. They can get you exposure to the S&P 500, the Russell 2000, and a bunch of other indexes as well. But that's not all there is to Vanguard ETFs. There are actually some that are not very well known that are index funds, but they attempt to beat certain benchmark indices by using kind of automated algorithms to construct portfolios. So we're going to get into those. Before we do, take a minute and check out the link you see on your screen, fool.com/Frankel. Get the top 10 stocks to buy right now from my sponsor, The Motley Fool. It is the best way to support this work I'm doing on YouTube. Again, fool.com/Frankel, and stay tuned toward the end of this video for a special message. So let me go ahead and share my screen real quick. All right, so as I mentioned, not all Vanguard ETFs are standard index funds. They have 5 what they call their factor ETFs that use proprietary models to try to beat their benchmarks. So let's look at these one at a time. The first one is called the Vanguard US Minimum Volatility ETF. The ticker symbol is VFMW, All of these use the same benchmark, the Russell 3000, which is kind of like the total stock market index. You've probably heard of the Russell 2000, which is the most notable small cap index. Well, the Russell 1000 is kind of the large cap counterpart to that. So when you combine the Russell 1000 and the Russell 2000, you get the Russell 3000, and that is a great representation of how the overall stock market is doing. All of these were started in February of 2018. Most of them have the same expense ratio, 0.13, but I'll list them for all the other ones as well. And so this one, this one's not necessarily trying to beat the benchmark. This one is trying to provide peace of mind. It looks at stocks that have a lot of return potential, but have much less volatility historically than the average stock. So it's done well over time, but it's not designed to beat the benchmark. But this one is just kind of designed to minimize the volatility or the price swings in your portfolio. Number 2 is the Vanguard US Momentum Factor ETF, ticker symbol VFMO. Again, benchmark is the Russell 3000, started in February 2018, and that same 0.13% expense ratio. These are really low-cost funds for ETFs that are attempting to beat an underlying index. You can see it has 721 different stocks in the portfolio right now, and it focuses on stocks with strong recent performance, aka momentum. Stocks that have done well. One of my favorite investing philosophies is hold on to your winners because they tend to keep on winning over time, and that's what this fund is all about. Top holdings are Palantir, Spotify, and Netflix, all 3 of which have done really, really well lately. So it looks for stocks that have outperformed the market recently. And the 5-year returns of the strategy are pretty impressive. They have outperformed the benchmark Russell 3000 index, so it's working. Number 3 is the Vanguard US. They call this the Multifactor ETF. This is the more complicated of the 3. Ticker symbol is VFMF, and it has the higher expense ratio. Generally, the more specialized an ETF strategy is, the higher you're going to pay for it. 0.18 is still very, very low for an ETF that aims to beat the market index. It has 571 stocks in the portfolio right now. So it ignores the most volatile stocks in the market, and it looks at 3 other things. It looks for momentum, like we just talked about with the other ETF. It looks for strong fundamentals, meaning like a healthy balance sheet and things like that. And it looks for stocks that trade at an attractive valuation. So if you're looking kind of for an all-around strategic ETF, this one could be worth a look. Number 4 is the Vanguard US Quality Factor ETF. Ticker symbol is VFQY. Same benchmark, same inception date, and that 0.13% expense ratio. This one has just over 400 stocks in it. It focuses on stocks with the strongest fundamentals, meaning the strongest profit margins, healthiest balance sheets. The top 2 examples of the fund's holdings right now are Gilead Sciences and Apple. So both of those are extremely strong fundamentally. So it focuses on those and other stocks like that. Like I said, about 400 stocks in the portfolio. And number 5 is the Vanguard US Value Factor ETF. Ticker symbol here is VFVA. Same Russell 3000 benchmark, same inception date, same 0.13% expense ratio. This has 636 stocks, in the portfolio, and it focuses on stocks with relatively low valuations compared to their fundamentals. So cheap stocks, this is the cheap stock fund. If you consider yourself a value investor and want Vanguard's approach to value investing, this might be a fund worth looking for or looking at. Top holdings include AT&T, Citigroup is up there, Altria, ticker symbol for that is MO. So really impressive collection of value stocks in this ETF. So none of these are actively managed ETFs. It's important to point that out. So these use kind of quantitative models to narrow stocks down based on certain parameters. All of them ignore the most volatile stocks for the most part. And they focus on three factors, and one of them combines those three factors. One, you have the low volatility fund. That's kind of in its own category. Then you have the value fund, the quality fund, the momentum fund, and then you have one that's called the multifactor fund that combines all three. So check those out. You can find a lot more information on Vanguard's website about it. Again, please take a minute, click subscribe to my channel if you don't already. Hopefully you found that informative. Let me know which one of them you think is the best fit. I'd love to hear what you have to think. I'll do my best to respond to any questions individually. And thanks for listening, and I will see you next time. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investments. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market more than 5 times. Go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 914% as of January 7th, 2025, and are measured against the S&P 500 returns of 174% as of January 7th, 2025. Vanguard is well known for providing low-cost index funds that everyday investors can use to get exposure to the entire stock market, certain indexes, sectors of the market, etc., without paying too many investment fees. So what you might not know is how many index funds Vanguard offers. And one of my biggest investment opportunities that I see this year are small cap stocks. I've said that small caps are the generationally strong investment right now. Small caps have underperformed large caps for a long time. They actually trade at their lowest valuation relative to large cap stocks since the late 1990s. And last time this happened, small caps outperformed for more than a decade. So not saying that exact scenario is going to play out again, but they do seem to be a really interesting value opportunity right now.